welcome to the Money Show. I'm Shrishti Sharma, and this show is your one-stop destination for all your personal finance queries. But before we get started, remember viewers, in the third segment, we will throw open the counter to get your mutual fund portfolio queries answered. So do send us your queries on a WhatsApp number, that is 865-797-4571, or you can also email us your queries onto themoneyshow@etnow.tv. But let's get started with two discussions that we have planned for you today, despite the fact that we will be answering your portfolio related queries. And let's shift focus to the first discussion that we're going to be having on mutual funds, because it is important to have your financial goals so that you can strategize your investments and select investment instruments accordingly. We often categorize investments in short, mid, or long-term investments, but where 1 to 3 years period mostly comes under the short-term duration goals. Now, for this, what kind of investment instruments is ideal, and can you achieve the short-term goals via mutual funds? So let's try to find an answer to that. And with this, let me welcome on board Mrin Agarwal, founder director of Finsafe. Very good evening, Mrin, and thank you so much for your time to ET Now. Always a pleasure having you on the channel. Firstly, when we talk about investments, that's always advisable to have a goal within that. Firstly, help our viewers understand what exactly are short-term goals, and in which time period, if they are planning for some big event, they could categorize it as a short-term goal.
So good evening, Shrishti, and thank you for having me on the show today. So what are short-term goals? Well, actually, I would say anything from 6 months onwards to 3 years onwards would be categorized as short-term goals. And, so anything that you need money for in the next 6 months or 1 year or 2 years or 3 years would be your short-term goals. Now, typically, these goals could be like a single goal that you might have, or it could be part of a bigger goal, right? So, for example, a single goal could be like, for example, to buy a car or to save for the down payment of a house. It could be, to save for that dream vacation, or it could even be to say that, okay, I want to go and watch the World Cup final. So, I need to save money for that. I know the time frame is very short right now for that, but yeah, it could be even that. It could be to plan a wedding. So these are your singular goals that you have, a single goal that you want to fulfill in the next couple of years. And then you have other goals, which are part of bigger goals in life. So, for example, it could be to say that, okay, I'm going to take it upon myself in the next 1 year to pay off my loans because I want to be debt free as early as possible. Or it could be that you don't have an emergency fund and you feel that now I need to build up an emergency fund. So I'm going to give myself the next 3 to 6 months to build up this emergency fund, right? So goals are innumerable. Everybody has different goals. What really defines short-term goals is the period of the goal, which is typically 6 months to 3 years.
For that understanding, Mrin, so from 6 months to 3 years, anything that you're planning out for, you could term that as a short-term goal. So, Mrin, today what we are trying to help our viewers understand is that if one has defined a short-term goal, how to go about and achieve that through investments. We will definitely deep dive into the mutual fund side of it. But firstly, if you can help our viewers understand not just mutual funds, which are the various options that are available, which could, amongst them, which could be lucrative ones, and if you have any suggestions that for the short term period you should definitely not look at this side of investments, any such instruments that you wish to highlight.
Yeah, so see, for any goal, whether it's a short, medium, or long term, right, you need to be very specific about the goal. It just cannot be, I want to be financially better off, right? You need to have a very, very specific goal in mind. Like I said, down payment of a house, or going for a vacation, or whatever it is, right? So goals have to be always specific. You need to know how much money you need. It cannot be like saying that, okay, I mean, whatever amount I can end up saving, I'll just save that much, right? You should always aim high, as you do in every other aspect of your life. The same way for your financial goals, always look at aiming high. And of course, goals need to be reasonable. So, I have had people saying, I want to build 100 crores in 10 years. And, honestly, that doesn't happen with if you're salaried, right? So, of course, goals have to be reasonable. But very importantly, you need to have the time frame also in which you're going to be able to build this goal. So, basically, you're defining a goal saying, I want to save for a down payment of a house, which is, let's say, 3 years away, and this is the amount that I want to save, maybe 40 lakhs or 50 lakhs, whatever that amount is. So that's how you basically fix a goal, right? Now, coming to what are the investment options for these particular goals, right? See, typically for the short term, you cannot look at equities because, equities can be extremely volatile in a 2 to 3 year period. And hence, the options that you have are the good old fixed deposits and of course debt funds. Now, as the viewers might be knowing that from April 1st onwards, the taxation on both these instruments is the same, right? So what sets them apart is really the fact that, in debt funds, you have the ability to get in and get out, and you might get a slightly higher return, right, than what you can get in fixed deposits. But you also asked me about some of the things that one should stay away from. So I think that's really important, because what typically happens these days is that anybody wanting to fulfill a short term goal tends to go for a short term loan, like a personal loan, or they swipe their credit card, or of course, you've got lots of buy now, pay later, travel now, pay later, marry now, pay later, and all of these pay later wale loans that are actually available, right? And essentially, all of these loans are very high cost loans. They do put you back quite a bit, and it's really not worth it to fulfill some of these financial goals, which are quite materialistic in nature if you look at it, by paying 16, 17% as interest, right? So I certainly would say that, do not use loans for doing this. The other thing that I also see that people are doing these days is investing in high yielding debt instruments. Like, for example, you have a whole host of NCDs that are available, or you've got P2P, invoice discounting, and some of these other new age investments as well. And the reason that people are attracted to these investments is because they're giving a very high return, like double digit returns, like 10% to 14%. But this comes with a lot of risk. So you need to be careful. You need to think about whether you actually want to take this risk, because it could also mean loss of capital, right? So do you want to, is the goal, if the goal is important to you, I don't think that you would want to take that sort of a risk. And hence, I would just say that either fixed deposits or debt funds, whatever you're more comfortable with. Of course, I would say debt funds over fixed deposits, but these are the two options.
There are two options that are available in hand, fixed deposit or debt funds, but a strict advice coming in to stay away from buy now, pay later schemes as well as personal loans. They are not good instruments to actually cater to your short-term goals. But Mrin, now let's shift focus to the mutual fund side, because what we generally tell our viewers is that in the long run, when you are investing in mutual funds, you should see the returns in the long run, and probably the consensus is that over 5 years you should be looking at your returns, so that on a year-on-year basis, if you see, then maybe that number could be at least 10%, or number that is actually beating the inflation rate. But when it comes to the short-term period, when we are talking about 3 years or maybe 6 months to 3 years, what are the various options available? And because you have been tracking this industry for so long, help our viewers understand that what could be the likely return expectation from this, because there could be volatility involved, but how to gauge that the money is safe, as well as what sort of a return expectation one can have.
Well, if you look at a long-term inflation average of about 6%, I would think that these instruments would just about beat it, right? Maybe on a pre-tax basis, but certainly not on a post-tax basis. So yes, there is a trade-off in that sense, because on the short-term side, the issue is that you really, you really need to conserve the capital. And you cannot look at risky investments. So somewhere, yes, I agree that these investments would not beat inflation on a post-tax basis, but I don't think that you have any other option that's available. And which is why I still feel that it's better to get into a debt fund, because of the active management in a debt fund, you might still end up getting a higher return. There is a possibility of getting a 0.5 to maybe 0.75% higher return than what you can get in a fixed deposit. And of course, you have a lot of flexibility in terms of withdrawing the money whenever you want to, unlike a fixed deposit where there is a penalty for withdrawal.
Okay, thank you so much, Mrin, for highlighting that. But Mrin, before we let you go, just wanted your advice on any of the top funds that are on your list, and a viewer who's actually looking at this particular episode and wanting to invest in one such mutual fund. So, what will be your recommendation?
Well, if you're looking at 3 to 6 months, you can consider the ultra short-term bond funds. And within that space, I like SBI and ICICI ultra short-term bond fund. If you're having a slightly longer duration, let's say 6 months to about 1.5 years or 2 years, you could look at the low duration funds. And there, I like the IDFC low duration fund. And of course, if your holding period is 3 years, then I really like short term plans a lot. They're my all time favorite debt funds in any case. And within that, of course, my all time favorites have been ICICI Prudential short term plan and HDFC short term plan.
Thanks so much for highlighting those funds. But if I may add a couple of more questions, then because while investing, we always talk about that portfolio allocation. When you already highlighted some of those instruments that are available, be it fixed deposit, debt funds, as well as mutual fund side as well. But when it comes to allocation, if somebody has, say, X amount of corpus that he's looking for short-term investments, then how can then allocation look like? Any advice on this?
Well, it's completely dependent upon what is your holding period, right? So
Hmm.
certainly, if your holding period is 3 years, then look at the short-term funds. But if your holding period is less than that, so actually, when you do any investment, you have to be absolutely clear about the holding period, and you can only decide the investment based on that. I think, from a risk perspective, both the ultra short-term and the low duration funds are pretty low risk in nature. And in the scale, of course, short duration debt funds are slightly higher risk, but generally, six months to about 2.5 years, you could look at either of the two categories. And then only if you're above 3 years, then you look at the short duration fund. So essentially, the split is going to be decided based on what's the time duration that you have.
And any age group that is advisable, or you feel that somebody who actually fits in this particular age bracket generally goes for these short-term mutual fund schemes?
No, not really. I mean, in fact, any investor can look at investing in these funds because these are debt funds, right? And most funds in these categories are holding the best quality paper. So, you don't really have credit issues in these funds. And these are, of course, very, very well managed. Some pretty large funds in these categories. In fact, I think all the funds that I've recommended are very, very large funds within these categories. So, and of course, there are a lot of rules and regulations on debt funds that are applicable, and hence, the funds that I've actually mentioned are all weather funds for any investor at any point in time.
Lastly, Mrin, because these are debt funds, so any tax advantage do they hold for the investors?
Not really, unfortunately, the tax benefits have been taken away from this financial year, so not really, no tax benefits, but still worth holding them.
Okay, thank you so much, Mrin, for highlighting all the aspects that could be at play and how can one actually plan to go ahead with investing in the short-term mutual fund schemes. Thank you so much. It was always a pleasure having you on the channel.
Thank you.
Okay, so that was the whole discussion about related to the mutual fund schemes. If you are somebody who's looking for short-term investments and investing through mutual funds, then there you go. You can actually look at investing into either fixed deposit debt funds, but if it's going to be a mutual fund, then you can definitely look at ultra short duration funds, low duration funds, short duration funds based on your goal period. Generally, anything that comes between 6 months to 3 years of time frame fits in the bracket of a short-term financial planning. And then Mrin recommendations are coming in as ICICI Ultra Short-Term Debt Funds, SBI Ultra Short-Term Debt Fund, IDFC Low Duration Fund, ICICI Short-Term Debt Fund, as well as HDFC Short-Term Debt Fund. So those were the top recommendations and was the discussion about. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, we'll continue our discussion with a very special guest joining us right after this break.